All this simple and easily identifiable trading strategy which is going to turn your whole trading game around. And even if this is your first time trading Forex, trust me, you'll be able to identify these easily on the chart in order to catch very big moves and know when to buy or sell in the market. Now, this strategy is known as chart patterns, and by the end of this video, you would learn all there is to know about chart patterns from beginning to the end. This course is recommended for everyone, and like I mentioned, for first-time traders who have no major trading experience. It's also recommended for intermediate and advanced traders who just want to step up their trading game. So don't worry about wherever you fall in this category. You are definitely going to learn something by the time this video ends. What I mean is you are going to learn how to use these chart patterns to spot your entries and your exit points in the market. You're also going to use this chart pattern to spot reversal points in the market. You're also going to profit from a bullish or a bearish market by simply identifying these chart patterns on your chart. So if that sounds like a very good deal, please stick with me to the end of this video because really you don't want to miss it. Now, chart patterns are like pictures that just show up on the chart when the market moves up or down, and this can help Forex traders to guess what exactly price might be doing next. Now, these patterns appear over and over again on the charts and can show you when the market is just about to go up, when the market is just about to go down, or when the market is staying the same and not really giving you any significant move. So when Forex traders see some of these patterns appear on the chart, they know when to position themselves for a buy or a selling opportunity of any financial instrument or a currency pair. There are different kinds of chart patterns, and these can be grouped into two. The first being the reversal chart pattern, and the second being the continuation chart pattern. The reversal chart pattern just shows up on your chart to let you know of a probable change in direction in the movement of price of a currency pair. And this could either happen at the end or the exhaustion of a trend when the market is just about to change from an uptrend to a downtrend or from a downtrend to an uptrend. Now let's get on the charts and let me show you how to spot some of these reversal chart patterns to use them in your trades in order to get the most profit out of it. Now the first reversal chart pattern that we're talking about is a double top reversal chart pattern, and I know that this is a bearish reversal chart pattern which indicates a likely bearish pressure to come into the market. Now before this chart pattern is formed, market starts in an uptrend until this pattern is formed and that bearish pressure or that reversal is likely to come in. So let me show you how this looks like on the chart. So the double top chart pattern starts as a series of higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. The market starts pushing up to want to break this previous high right here, but then it gets there and then it's not able to push up anymore. It simply gets stuck here and then comes back to retest this low right here. Now when it gets here, you can see that we have something like an M forming. I don't know if you guys can see it. We have like an M forming, and that's how the double top chart pattern looks like. It looks like an M. You can see we have two tops here on the M. We have the same thing here. We have this level right here on the M. We have the same thing here, and then we have these two legs. So this looks like an M. And this level here is known as the neckline. This level below here is known as the neckline. Please keep that in mind. It's called the neckline. Neckline. All right, and this level above here is also known as the double top. This is what we call the double top. Please keep that in mind too. It's known as the double top. All right, now you can't confirm that this is a bearish reversal until this neckline breaks to the downside here, because as it's still here, it's still bullish. Per market structure, it's still bullish until you have a break of structure here, which is this higher low right here. Then you can confirm that the neckline has been broken and there's a likely reversal to come into the market. So please take note of this. Now when this breaks, you don't suddenly start getting in for a sell at this point right here. What you have to wait for is you wait for a retest back into the neckline here before you have your series of lower highs and lower low forming, showing that market has indeed reversed with a double top forming. I hope you understand. Now I don't know if you've noticed something. This level right here, which is the neckline, can also be called the support, because realize that when market got here, there was a push up. All right, so we can call this level as a support level. So let's indicate it as our support level. Okay, now when the support was broken, this support level here became a new resistance level for new selling pressure to come into the market, or likely selling pressure to come into the market. So we indicate this level as our resistance zone because support has been broken, and when support breaks, it becomes a resistance level. Resistance, and when market retested this resistance, we had series of lower highs and lower lows forming. So that's exactly how to trade the double top, and that's how the double top chart pattern looks like. Always wait for a break of the neckline and a retest of it before you enter in for a sell. Don't just enter in for a sell when the neckline breaks right away. That won't be good for you, trust me. Just wait for a retest and then you enter in for a sell. So that's how the double top chart pattern looks like. Now let's go on the chart and let me show you how to identify the double top chart pattern on the real chart. Okay guys, so I want to help you spot some of these double top chart patterns on the real chart even before they form. So before they start forming, you have series of higher highs here, we have series of higher lows here, you have higher highs here, we have higher lows here, we have series of higher highs here, higher lows here, higher highs, higher lows, and then a higher high right here. When market got to this level, we realized that it will come back for a pullback, and then when it came for this pullback, it retested it, and then this market tried pushing up to break this previous high here. And I realized that when market got there, it wasn't able to break the high here, so it came back to this previous low, and then market suddenly broke through to the downside. So once this level breaks, then we can confirm that the double top pattern is indeed confirmed or valid, because you realize we have our neckline here. So this level right here is known as the neckline. And once this neckline is broken, okay, like I mentioned, you don't enter once this market breaks or this candle closes below the neckline. What you need to do is you need to wait for a retest into the zone here and then enter for a sell. Now what you notice, you have series of lower highs and lower lows forming, and then market continues to push down. I hope that makes sense. All right, so please note the double top is what we have up here, the first top here, the second top here, which gives us a double top. We have the neckline here, which is also acting as a resistance, because when market go here, there's a push up. The double top here is also acting as a resistance level. We have a break of the neckline. We wait for a retest, and then we continue with a new trend or the reversal that's coming in. I hope that makes sense. And the next chart pattern that we'll be talking about is the double bottom chart pattern, and I'm sure you have an idea of it already since we've already done the double top. And the double bottom chart pattern is a bullish reversal chart pattern, which also indicates that there's a likely bullish reversal coming into the market very soon. Okay, so for the double bottom chart pattern, it usually starts as a market in a downtrend where we have series of lower highs and lower lows, lower highs, lower lows, lower highs and lower lows. The market retests this low right here, comes back to this low, it wasn't able to break it, then comes to this level right here. Now immediately we can tell that market has given us a double bottom here where we have one level here and then we also have one level here. Now immediately, like I mentioned in the double top chart pattern, we have what we call the neckline. So what I'll do is I'll just draw my neckline, which will be this level here. Okay, so this will be my neckline, this right here will be my neckline. Now once market is not able to break this neckline, the bullish reversal chart pattern hasn't been confirmed. It means that market is still bearish, because we have a lower high, we have a lower high here, we have a lower high here, we have a lower high here, we have another high here. Until market breaks through this level, this market is still bearish. So please keep that in mind. And you would notice that this looks like a W. So we have a W here. It looks like a W where we have the bottom, these two bottoms right here. We have this neckline here, and then we have the two legs of the W here. So this is like an inverse M or something, you understand? So when you are trading the double bottom chart pattern, you need two confirmations. You need to have two bottoms here where market wasn't able to break. You need to have a neckline here. And then when market breaks through the neckline, all that you need to do is to wait for a retest on the neckline, which is back to this level right here. Then you take your buy entry from the neckline all the way to the upside where you have series of higher highs and higher lows beginning to form on the chart. I hope that makes sense. So that's how to trade the double bottom chart pattern. So let me just indicate this so you have a clearer picture of it. This here is a double bottom. Okay, now we have the neckline right here. We can also call this neckline here a resistance, because when market got here, we realized that there was a selling pressure which brought market all the way down here. So we can also call the neckline a resistance zone. So we realize that we are applying everything we've learned so far on support and resistance to trade these chart patterns. We have the resistance here, and then this level here, which is the double bottom below, can be our support also, because we can see there's buying pressure whenever market gets to that level. So we have our support here also. So when market breaks this resistance and then retests the level right here, we have a new support level forming, because I mentioned in support and resistance that when the resistance is broken, it could become a support which could bring likely buying pressure into the market, and that's what we see on the chart. So this is how to trade the double bottom chart pattern on the chart. Now let's get onto the real chart and let me show you how to trade this and apply this to spot your entry points in the market. Okay guys, I'm about to show you how to trade the double bottom chart pattern on the real chart, and also how to use this to find entry points in the market. So you notice that in this market in the downtrend, like I mentioned, we have series of lower highs here, lower lows forming, lower high, lower low, lower high here, lower low forming. We have a lower high here, we have a lower low here. But then we would notice that when market got to this level, okay, we can see market came all the way here, which is this lower high here, from the lower low here, pulled back here to form a lower high here, came down here to form a lower low, wasn't able to break this low to form a new lower low, but then pushed up and then broke the neckline we have here. So we can see we've broken the neckline here, which is also a resistance zone. So when this happens, you don't have to just jump into the market immediately. What you need to do is to wait for a potential pullback into this level here to join the move where you have series of new higher highs and higher lows forming. So that's exactly how to trade the double bottom chart pattern. I hope that makes sense. So please don't rush into the market when you have such structures. Wait for a break and then a retest of it. Make sure you have your confirmation, which is this low here, which is another bottom, this low here, which is another bottom. You have your neckline here, you have your neckline breaking through, and you have a retest here before you take your entry right at the neckline here to the upside. I hope that makes sense. So now let's move on to the next reversal chart pattern. And the next reversal chart pattern we're talking about is the head and shoulders pattern. Now this pattern starts as a market in an uptrend, so you have your series of higher highs and higher lows, higher highs and higher lows, higher highs, higher lows. Then immediately you see market will just shoot up to the upside, comes back to retest this low right here, this level here, here, comes to this level. Then buyers try pushing the market up, but they're not able to push it above these highs here. So they struggle to push it all the way here, come back to retest this low. And then once we see this, you can see that there's an incoming head and shoulder pattern forming. Now, before you can tell that this is a head and shoulders pattern that's forming, let me show you how you can use to identify it. Now, you have this level here, which becomes the left shoulder. Then you have this level up here, which is the higher point here, becoming the head. And then you have this level here becoming the right shoulder. So you can see we have a head and shoulders, head, and then these are the two shoulders. So you see it looks like a human head here, up here, and then you have two shoulders right here. All right, now we have something in the head and shoulders which we also call the neckline, like I mentioned in the other patterns. So this here, this level here, it can be the support or the neckline. So this level right here becomes the neckline. Okay, so this is the neckline for the head and shoulder. It can also be the support. Okay, so once you see this pattern appearing on your chart, you don't immediately jump in for a buy, because market could possibly shoot up again all the way to the upside here and then make your zone invalid. Okay, what you need to do is to wait for a breakout of this zone. Okay, then you wait for a retest into this broken neckline here, and then you start having series of lower highs and lower lows to confirm that indeed a bearish reversal has come into the market. I hope that makes sense. So this is how your head and shoulder looks like. Let me just write it down so that you can have a visual picture of how it looks like. So this is the head, and we have the right shoulder here, right shoulder, and then we have the left shoulder here also. So once we have this, then this place also becomes a neckline. This is the neckline or support. So let's make it neckline slash support level. Hope that makes sense. All right, so we have our neckline slash support level here. We have our left shoulder here, we have our head, we have our right shoulder, and once this neckline was broken, immediately this level becomes a resistance level. Okay, we have a resistance level forming at this point here. So you can just write resistance. Sometimes it's better to write these things on your chart when you identify such patterns, so you know what exactly to look out for. So once this level was broken, here became a new resistance. You wait for a retest here before you join the move to the downside. I hope that makes sense. So that's how a head and shoulder looks like. And let's go on the real chart and let me show you how to spot these and also use some of these for your entries and exits in the market. Let's move on to the real chart. So when we look at this chart, we can tell that market is in an uptrend at this level. Now let me show you. We have a series of higher highs here, we have higher lows here, we have higher highs here, we have higher lows here, we have higher highs here. Price came back to retest this low. We have higher highs here, we have a higher low here, then price shoots up to this high here, comes back to this low, this level right here, and then tries pushing up to break this high, but then market is unable to break it. Now what happens is that market tries coming down to retest this low again, but unfortunately there's so much selling pressure that sellers break the neckline here, causing a bearish reversal to be confirmed in the market. And we see markets or this candle breaking through and closing right below the neckline, confirming that this head and shoulders pattern has been confirmed and there's a likely bearish reversal coming into the market. I hope that makes sense. So let me just indicate everything so you see everything well. So here becomes the left shoulder, here becomes the head, here becomes the right shoulder, and then we have our neckline or our support level here. So we have our neckline slash our support level here. So if I were trading this market, what I would do is just to wait for a clear break of structure which market has given us. I'll just wait for a pullback into this broken support which has now become a resistance, and then take my entries from here and then keep on going down with series of lower highs and lower lows forming. I hope you understand. So that's how to trade the head and shoulder pattern on the real chart, and I hope you guys will be able to identify these easily on your chart to apply them and also to get very good entries for selling opportunities. All right, now let's move on to the next reversal pattern. So the next reversal chart pattern we're talking about is the inverse head and shoulder chart pattern. So just like the head and shoulders where we had the head, the right shoulder, and the left shoulder, this inverse head and shoulder is just the opposite of the head and shoulder that we did. So just like how we had the head and the right shoulder and the left shoulder, we have the same thing for this inverse head and shoulder, just that this is turned upside down. So let me show you how that looks like. So before an inverse head and shoulder pattern is formed, market usually starts as a downtrend. So you have series of lower highs, lower lows. We have lower highs, we have lower lows. We have lower highs here, we have lower lows here. We have lower highs here, we have lower lows here, we have lower highs here. Then market moves steep to the downside. Then we have a lower low form. Market tries to retest this high right here, giving us a new lower high or a double top here. Then market tries coming back down to form a new low. Now realize that when market starts coming down here to retest this low, buyers step in and then start pushing market up, causing this market to fail to break this low here. So you have a structure like this form. Now when you have a pattern like this form in the market, then you can tell that we have an inverse head and shoulder, in the sense that we have the head here, this is the head, we have the left shoulder here, we have the right shoulder on the right here, and then we have the neckline here. So this also becomes the neckline or the resistance level. I hope that makes sense. All right, so until market breaks this neckline, this market is still bearish. We don't consider this market to be a bullish market. Even though we have the left shoulder, we have the head, we have the right shoulder, we need a break out of this structure here to confirm that indeed buyers are stepping in to bring buying pressure into the market. So until you have a breakout, you don't have to enter this for a buy or any kind of trade. Just relax and then wait for a breakout, and then you wait for a retest of the breakout, which has now become a new support level, and you start having series of higher highs and higher lows where you can profit from this major move in the market. I hope that makes sense. So this is how the inverse head and shoulder looks like. We have the neckline here, or which is also our support level. We have the left shoulder here. We have the right shoulder here. This becomes our right shoulder. And we have our head here. Okay, so you can see we have an inverse head and shoulder form. If we turn this upside down, you realize that it looks like the first one we did where we have the head and shoulders for a bearish market. This is just the inverse of it, where we have the left shoulder, the right shoulder, and then the head turned upside down to the upside. So that's how this looks like. And let's go on the real chart and let me show you how to spot your entries on a chart pattern like this. Okay, so now when we look at this market, we can tell that this market is heavily bearish in the sense that we have market coming all the way down here. We have market trending downwards. You can see this line is bringing market all the way down here. So before you get an inverse head and shoulder, most of the time market is going to give you a series of lower highs and lower lows before that inverse head and shoulder is established. So we can see we have our lower high here, we have our lower low here, we have a lower high here, we have a lower low here, we have a lower high here, we have a lower low here, we have a lower high, then we have a lower low here. Now this becomes our head. Let me show you how this looks like. So we have this lower high, we have this lower low, we have this lower high, we have this lower low, we have this lower high, we have this lower low, we have this lower high pull up here, we have this lower low pull down here, we have a lower high here, we have a lower low here, we have a lower high here. Market pulls down to this low, comes back to this high, tries coming back to break this low, retest it, then buyers step into the market. So this is how it looks like on the real chart. Now take note of something. Most of the time these structures won't look exactly like what I'm drawing on the chart. Sometimes they will have just a little bit of twist just to confuse you as a trader, and if you are not smart or you are not assertive on most of the things you do, you will miss some of these patterns and think they are not formed yet. Meanwhile, most of these patterns are formed and ready or ripe for entry. So take note of that. So we can see right here we have our head here. Just by looking at it, I can tell we have our head at this level here. Okay, we have our left shoulder here, we have our right shoulder here, and this level here becomes our neckline. We can see that, right? Okay, so here becomes a resistance or a neckline resistance or whatever. So we have a neckline at this level, and I mentioned that you don't enter a trade until the neckline is broken, right? So then let's see what happens if the neckline is broken. So we have markets coming down here, markets pushing all the way up here. Now let's see what happens, and then suddenly we have markets closing above it, right? So we can see that now as market has closed above this, we can confirm that the inverse head and shoulder is valid and that market is ready for buys. So you see how to spot some of these things to make the most out of this market. Now see what happens afterwards. Markets push all the way up here, and this could be you benefiting from it. You understand? See what that's happening. Market is always going to give you the best if you take your time to spot your entry points and your exit points very well. So that's how to also trade the inverse head and shoulder in the real market on the charts. All right, let's move on to the next one. So the next reversal chart pattern we're talking about is a triple top chart pattern. Now this kind of looks like the double top in a way, but it has a little variation to it, and let me show you how this looks like. So in a triple top chart pattern, you have a market usually starting an uptrend where you have series of higher highs and higher lows. You have higher highs, you have higher lows, you have higher highs, you have a higher lows here. Then you have your higher high up here. The market comes back to retest this low, it's not able to break it. Goes up to retest this high, it's also not able to break it. Comes back to this low. Now immediately we can see that we have something like a double top forming, right? But I said that until you have the neckline breaking, this neckline right here breaking, you don't consider that the double top is complete. You get it? So let's see what happens with a triple top chart pattern. Now when market hits here, is not able to break it. It comes back again into these highs right here to retest it for the third time before coming down and then breaking it to the downside here. So we can see that this neckline here has been broken, right? This is how it looks like. And you have your triple top here, you have your first top here, you have your second top here, you have your third area here. So this becomes your resistance area or your triple top area, and this level here becomes your neckline, which can also be your support area, right? So when market breaks through, then we know that market is ready for a sell here. So let me just write these things down so that you can just keep them in your head. We have the resistance here, resistance slash the double top, okay? And then we have the neckline here. This area becomes the neckline slash the support. Sometimes it just makes sense to write some of these things on your chart so you just know exactly what to look out for, right? Then we have the support being broken here, and then here becoming a new resistance, right? So this is how the triple top chart pattern looks like. Now let's go on the real chart and let me show you how to identify some of these things, spot your entries and your exits in the market. Okay, so for the triple top chart pattern, we have something like this, okay? We have a first touch here. This is our first touch on the triple top. We have our second tap into the zone here, which is this zone right here. Then we have our third touch into the triple top zone. So now what we can see is the market tried pushing all the way up here, came down here to retest this low. The market tried pushing price all the way up here to retest the highs here, wasn't able to break it, came down to this low again to try retesting it, then came back to this highs finally, to this level right here. We can see this resistance zone here. Now the third tap into this resistance zone, then we see market coming all the way down here. Now let me just play everything and see what happened after market broke that structure. Now we can see a very big bearish candle breaking the neckline all the way here, confirming that this triple top is valid, because we see our first touch here, we see our second touch here, we see our third touch here, and this is exactly what a triple top chart pattern looks like on the chart. I hope that makes sense. So you can apply all the principles that we learned in the previous chart patterns to also find your entries and exits in this particular one. Now the next one we'll be talking about is a triple bottom chart pattern, and this chart pattern is a bullish reversal chart pattern, and it indicates that there's a likely bullish pressure to come into the market very soon. Now this usually starts as a downtrend where you have series of lower highs and lower lows. So we have our lower highs here, we have our lower lows here, we have lower highs here, we have our lower lows here, we have lower highs here, then we have our lower low right here. Now market comes back, try retesting these lows, is not able to break it, comes back to this low, try retesting it, it's also not able to break this low to the downside, comes back to this level right here, not able to break it, then comes back to the lows right here to try and form a new lower low. But then buyers are still strong in the market and then push market all the way back to this level. Okay, now immediately you can tell we have a triple bottom here where we have one level here, we have another level also at this side, and we have the next third touch at this level right here. So you can tell that you have a triple bottom right here, which is indicating a likely bullish reversal in the market. Now we can see that this level right here is our neckline. Now we have a neckline here, and because market hasn't broken this neckline, we can't confirm that the triple bottom is valid. We need to wait for a breakout of this level here before we can confirm that indeed we are ready for a bullish reversal, or the triple bottom has been confirmed and is valid. I hope you understand. So what we wait for is we wait for a breakout of this zone, same principles we've been using, wait for a retest to this new support here, then we move to the upside this way. I hope that makes sense. So this is how the triple bottom also looks like on the real chart. So please have a visual picture of it so that you can apply it whenever you see it on the real chart. Now let's go on the chart and let me show you how to apply this triple bottom to find very good trade entries for a bullish move in the market. Now this is a gold chart, and we can see we have series of lower highs here, we have lower lows here, we have series of lower highs here, we have lower lows here, we have lower highs right here, we have lower lows here, lower highs here, lower lows, lower highs, lower lows, same thing. Moving on, there we have a lower low here. Now price moves up here to retest these lows here, then comes down to possibly make another lower low, but then gets here, then buyers step in to push market up. Now we realize that when price got here, it pushed up to this level. Now sellers came in trying to also push market all the way down here, but buyers also moved market up from this same level here, causing a triple bottom here, and then pushing market all the way back into the highs here. So now we can see that we have a first level here, which is the first touch here, then we have a second touch at this level here, then we have a third touch at this level right here. I hope you understand. Okay, so now until this triple bottom is confirmed, we need to break this neckline here, which is this level here, right? Now we can see that currently market is not breaking the neckline, and we can confirm that we are ready for a bullish market. So we need to wait to see what happens next. Let's see what happens. Now we have a breakout of this zone, then we can immediately confirm that market is ready to buy, or there's a bullish reversal coming into the market. Now after this breakout, we can see market push all the way up here, retested the zone here, and now let's see what happens next. I hope you can see whatever is happening, right? So after market retested the zone we drew here, which was the neckline that was broken, now we have bullish pressure coming into the market, and then we have market pushing all the way here to give us the bigger move on this trade. So now we see after market retested this zone, we see all this bullish move coming in, giving us a very good trade to catch a very big move on the gold market. So this is how to simply apply some of these simple chart patterns such as the triple bottom to also catch very good buy moves in the market, considering the broken neckline as your point of entry in this trade. I hope that makes sense. So that'll be all for today, guys, and I hope you learned something on reversal chart patterns. Personally, I use these patterns in my trades every single time, and they have a very good win rate. So I'd also want you to apply some of these reversal chart patterns in your trades this week, and let me know the outcome of it in the comment section below. In our next video, I'll be talking about the continuation chart patterns and how you can also join a trend to profit from a very big move. Sometimes we miss a big move and we feel like we've lost it all, but the continuation chart patterns also give you an entry to profit from the major move, whether it's a bullish market or it's a bearish market. So if you haven't smashed the subscribe button, please do all to hit that subscribe button now so you get notified when I drop the next video on continuation chart pattern. Also follow me on Instagram and on TikTok at Abatrace, and do all to join my free trading community where I drop trade signals for people to make money on a day-to-day basis. Just last Friday, I dropped the gold trade which went 400 pips for the free trading community. So if you're not in this community, you're missing out so much, and do all to find the Telegram link in the description below to join the fastest trading community in Africa. That'll be all for today's video. It's Abba Trades right here, and peace out.